Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning, all. Ira Epstein. Good weekend. Ira Epstein of Linn & Associates with your weekend review for this Friday, March 10th, 2017. Now, I'm early today. It's 11 o'clock in the morning. I normally do these in the late afternoon, but I have to be out of the office this afternoon, and I wanted to get them done. We saw the jobs data number, 235,000. The whisper number was 230. The average guess was 197 to 200,000. Unemployment rate 4.7, 6-cent uptick in the average hourly wage. Okay, pretty much what the market thought, and you're not breaking the stock market very much on that news at all. Not saying it can't be lower by the end of the day, but the route that might have come so far at 11 in the morning isn't here. And we'll look at charts on that in a minute. Gold, of course, feels the pressure of the overall idea that more interest rates are coming, but the dollar's not up on that news today, and I think that's important. And of course, you know about the rout that is going on inside of the energy complexes. So many traders had bought that market according to CFTC data of open interest, and as I see it, anyone that put on bull strategies, whatever they are, they should be underwater at this point in time. Grain market still feeling pressure, but I see that pressure abating a bit. So let's go to the charts and see what we've got for the month so far. For the month at 11 in the morning, we're still up 6.5 points in the mini Dow. It's early in the month, so we don't know where it'll end up. And as you can see, you've had a nice upthrust going on. You can argue the same thing on weekly charts. In fact, here's the interesting thing. If you look at these weekly charts, you haven't had a lower low week until when? Look at the low right now at 23.54 to 23.57. This is the first chink, as I call it, in the armor, where the market might be now saying, okay, we're done with the executive orders, we're done with all the other stuff on from President Trump. Now the real meat begins. Can he get Obamacare repealed? Can he get tax breaks done? Blah, blah, blah. All those other items, the harder things, NAFTA, they're all ahead of it. And I think the easy part of the market seems to have stalled right here. That does not mean this market's turning down. It just means it's stalled a bit. When we look at the weekly chart with the swing line, and this is the chart without it, and this is the chart with it, you have higher lows, higher highs. So nothing wrong there. You're in an uptrend. Another nice part on the chart is that the 18-week moving average of closes is above the last swing line low at 22.51. That's good news. Obviously, it's fairly far away, about 90 points away, but it's still in a good formation. And you've hit a new resistance point like you did back here, and the market's probably got to come in from the Bollinger top and develop some sideways action. I am watching how the bands are starting to lift and turn down right here. That is a sign that this market, as I just said, might be ready to stall a fraction. In the slow stochastics on the weekly charts, and I don't consider the slow stochastics as good a tool on the longer term charts as they are on the daily or the very short term intervals, it is still bullish, pointing to a bit of a correction. Whenever you see the red line under the blue, that's a sign that price momentum is waning a bit. Same thing in terms of the momentum here on the slow stochastic, but the fact that both numbers, the red and the blue, which are really the K and the D lines, are staying over the 80 level, it's still a sign of overall strength. As you can see right in the zone, in this case, of the upper Bollinger Band, that's where you ran into your resistance. In this market on a weekly basis, and the Dow's down 114 points. And in the NASDAQ, surprisingly, again, powerhouse. If you look at the daily charts, you know, you get a little different story than how strong it is on the weeklies, with a fully embedded reading that is not yet even showing that it's ready to back off. The weak sister, and there's always a weak sister of a group, is the Russell. And that is because this market is just backing off to the 18-day average of closes right now. It's sort of in a weird spot here. You have a lower low, a higher high, back to the 18-day average in a corrective mood, if you will, or mode might be the better word, but I think it's both, as the market's slipping back on the slow stochastic reading. VIX I only do on the dailies, and they're flat. Now, one thing I want you to look at on the VIX, look at how often it hits the 18-day average of closes. It has gone nowhere for all of 2017. When we come to the March 10-year notes, you shouldn't be surprised. The market had built in that the Fed was going to make a move this coming week in March. I think it's there. You're at about a 2.6 rate right now, so we'll see what happens. As you can see, the pattern's a higher high and lower low, and as you're coming into the lower Bollinger Band at 122.29, I'd be looking for support at that number. I think the market is now just a sideways market more than anything else. The dollar index pulling back on the weekly charts to support at the 101.27 area. As you can see, so far 101.22.5 has been where it's at. It is in an uptrend. Momentum on the weekly chart has waned. It has just been going sideways. The market did not get a pop off the jobs data, and a lot of traders were looking for that to happen, not coming in but also not falling apart. The euro currency is trying to lift its head up. Higher lows, higher highs. The reason for this is that this week we saw the ECB president, Mario Draghi, say that what they're seeing taking place there is not as dire as it was. They're giving ideas that maybe they're turning the corner. They're not talking inflation, but they gave reasons for this market to be able to rally. Possibly it gets back to the 106.60 level. We don't know. At this point, it is bullish, not bearish. British pound, bearish as can be. Market still looks to me quite weak. Lower highs, lower lows into the lower Bollinger Band. But now you've got the Scots talking. They want a referendum. It's going to be, all the bad is about to gradually start surfacing once the Article 50 takes place. If you're looking for a quick resolution, though, forget it. The EU members are going to make it very, very difficult and a prolonged process for the UK to continue doing business the way they used to. Another market that I still remain very much in the bear camp on the charts is lower highs, lower lows under the 18-week moving average of closes. Momentum moving down, no reason. The lower Bollinger Band can't be a big target there. And in the Japanese yen, lower highs, lower lows, still looking quite bearish as I see it there. Then we get to the market that has sort of caused problems this week, and it's the crude. As you can see, if you come back just here, and this was February 24th, you were in the 53.59 level. You started to wane last week, and this week you really let go by $4.50 in the market. So you've come down. The market has got more or less a sideways momentum, and if you were to say, on the Bollinger Bands, where are you? Well, 57.70 top and a 45 bottom, but more realistic is probably a 54 to a 46 level if you reach down to the 100-day average of closes. And is the market trending? It is not. You have a higher high and lower low pattern. You certainly have downside bias and momentum on this. In the nat gas, don't be surprised if prices try to reach up to the 317 level, back to the 18-day average of closes to see where you're at. The daily charts, though, are ahead of them. It is getting dangerous into overbought territory in this $3 level, but I can make an argument on the weekly charts for even stronger momentum. I'm Ira Epstein. One of the things that I'd like you to consider is what I teach. I believe in very short period of time. Certainly, give me 5 minutes a day, 10 minutes a day, over 15 days, 20 days, I can teach you the techniques that I do here. How to do them, how to read them. Let me tell you how I go about it. I created a video course that's all online, so there's no shipping and handling fees and all that nonsense. Normally, I sell it for $179.95, not the $1,500, $2,000 amounts that I see elsewhere. And yeah, I've attended those courses, some of them, not all of them, obviously. I've read up on them. I think I frankly have a better course, and I'm convinced I can teach you how to work with the different formats, the swing lines, moving averages, the window envelopes, the Bollinger Bands, the slow stochastics, the tricks of inside days, outside days, what do they mean, and all that. 54 videos, and then I back it up because every morning I put out what I call a subscriber video where I review 40 charts for you and you get to see what I'm doing. So yes, the videos cover past data and we give you the charting software so you can keep up with it. Then the daily research covers what's going on now. So we want you to be able to learn today, but you have to get the basics from back then. Instead of the $179.95 price, I lowered the price to $89.95, and for a limited time, if you type in the word Ira 15, we give you a coupon. Just type that in and you get it for $74.95. The charting software, the research, that's $160 by itself. The course used to be by itself another number, all for $74.95. Take advantage of it. Call my staff. Go to our website. You can click right up here. It'll take you right to the page you need to get into the course. Or under us, you can see the different services we offer and write us a note, hey, I'd like more information. I'm Ira Epstein.